Welcome to another episode of Agent versus Lender, and today we have with us Bruce Warburton and Taylor Archibald. Taylor is actually, we all work together. We all work together at Pippin Team at Cardinal Financial, and Taylor is our operations manager. He really, in all reality, he kind of runs the show for us. And Bruce is our senior loan officer, and with him brings us a wealth of information, and he's got a really particular loan program that he does, and so we want to introduce that today. But first, before we get to that, Bruce, tell us a little bit about yourself and how you got into the business, and tell us about Bruce.
Well, what can I say about Bruce? When I was a young, dumb kid back in the early 90s, I was trying to figure out what I wanted to do when I grew up, and I stumbled into real estate, and I started as an appraiser. So I did appraising for about 10 years. And, as the appraisers were under more and more scrutiny, and it was real tough on appraisers, I decided to jump fence and move over to the mortgage side of the business. So I've been in lending for the last 18, 19 years. And I've been a broker at several different broker shops and been in few lender shops, and I really like this side of the fence better. I get to have more hands-on with people and be involved longer. That's my professional career, but I'm a dad of 3 and a grandpa of 5, and I just love it. It's fantastic. It's a great time to be alive and an amazing time to be in business right now.
Yeah, it is. So what Bruce doesn't tell you is, like, we happened to be out on the lake today, and he's quite the wakeboarder. It's really fun to watch him do flips off of the wakeboard. So
it's fun.
Trips or flips, whichever. So let's.
Bruce is kind of like Batman. I mean, he seems to. I think that I know him, and then all of a sudden he drops a bomb on me, and I realize he's got like the secret identity where he's doing, flips and driving fast cars, and yeah. He's a pretty cool dude.
He's a fun one to know. He is a fun one to know.
Well, thank you. I'll be honest, flattery will take you a long ways with me every time.
Awesome. So, the reason why I have Bruce on here today is he's got a really intriguing program that I just don't know that I've heard of before. And he works with engineers. Is that right?
Yes, sir.
So he works with engineers, and so you know what? I'm not gonna pretend like I know this program, because you're the man. So tell us about this program and who it helps and how it can help them, and so tell us a little bit about that.
You betcha. The mortgage industry is the most challenging, unique, frustrating, rewarding business that I've ever come across. And it is makes people the happiest and the most angry and satisfied and unsatisfied. And there's so many options and so many lack of options. And over the years of being in the business, they have programs for first-time home buyers. They have VA loans, they have rural loans, they have, repeat buyer loans. They even have doctor loans. And so I've often thought about that. It's like, why not have loans for engineers? Engineers are amazing people. I mean, so many things that we have in this life that benefit us are because of engineers. We drive cars because of engineers. We fly planes because of engineers. The buildings that we work out of and play out of and go to take pictures of are all based off of what engineers do. I mean, engineers are amazing people. And so, my family are mostly engineers. Everybody's an engineer in my family but me. My father-in-law was a mechanical engineer. Both of my brothers are mechanical. One's a mechanical, one's an electrical engineer. My one brother, every kid in his family's engineers. I mean, I'm surrounded by engineers. So I've learned to think like them. I've learned to cohabitate with them and live with them and be a part of their lives. And I've learned to know what they want and what they don't want. And as I've evolved in the mortgage business and seeing all these other people get their special treatment, if you want, it's like, why not engineers? Engineers God, they deserve it as much as anybody else. I mean, they have loans for school teachers and firefighters and first responders. And so I've come up with some pretty fancy stuff for engineers that cater to them. You know, the engineers are, not that anybody else is less of a thinker, but engineers are, sometimes they overthink things. And I don't mean that in a negative way, but they have to. That's what they do. They overthink it as they're developing their products and learning how to build their stuff. They really have to go above and beyond. And they take that home. They take it personally. And so when they do their finances, when they do their grocery shopping, have you ever looked inside an engineer's drawers and cabinets to see how they've put it all together? I mean, these guys are, to some people, they'd say they're crazy. And other people are like, holy cow, I wish I could be that methodical and that organized. So we put together some loans for engineers that cater to them and make more sense for them on the finances, so that they can have better payments and have more control of their interest rates and all kinds of fun stuff.
You had mentioned that engineers are really methodical and
calculated.
They're calculated, yeah. So what a lot of people don't know is that I worked on the Space Shuttle rocket booster program in the engineering department. I was not an engineer. I was an engineering scheduler, but I worked with them day in and day out. So when you say that they're very methodical and calculating and they overthink, I don't know that overthinking is the right word, just because, you know, when you have people's lives in your hands, I want somebody to really overthink it. I want somebody to think it through, because that's not something that I do. But on the other hand, it's just like, don't overthink a mortgage. Just go to somebody like Bruce that understands the ins and outs of the mortgages and understands the engineers and how they think, and just ask you the questions, and then that way they don't have to overthink it, because you're going to have the answers for them.
I've already got it done. And I didn't mean overthinking is a negative way. It's just, that's just how their brain works. They think things backwards and forwards and up and down, and they really think about it. I mean, that's what they do. They have to. And that's where these loans for engineers comes from. I'm around them. I understand them. We put it together. I've got it down for them. They just got to have the conversation with me. Bruce, what do you got? How does this work? How does it help me as an engineer, as opposed to what the doctor loan was for the doctor, or the first responder for the first responder, or your VA guy? What, you know, what's the benefit for me? And
so that's a good question. How does it help them? What is it different about the engineer program that maybe isn't, that is different? And how does it help them?
You know, the best thing about the engineer loan that I can come up with in all my putting this together and making it right is that this program will allow the engineer to pick his interest rate. He gets to have whatever he wants. We will help him set his loan up for him or her personally. Some people are really sensitive with interest rates. Some people are sensitive with the term of the loan, or the costs of the loan, or the time frame. But everybody's got a different point of interest or sensitive point. And so with this, we will show the engineer how to structure this for their particular needs, whether they're a first-time buyer engineer, or they're a moving up engineer, or they're looking for a tax benefit, or they're looking to spend minimal. We'll actually show them how it works, and the engineer gets to choose.
I think that's go ahead, Taylor.
Yeah, so you said that it'll work for like the first time buyer type engineer, or someone that's even established, because I know a lot of programs, so like doctor programs, for example, they really target people that are fresh out of school. And then that's kind of when you use your doctor loan program, but then normally on your transactions after that, you're just going to be like standard, conventional, you know, whatever, or jumbo, or, you know, whatever it may be. But so this one will work for regardless of the phase, really, right?
That's correct. It's funny you say that, because I was just structuring a VA loan for a buyer, and actually, excuse me, a guy wants to refinance, and he's got more than 50% equity. He's got fantastic credit scores, and he wanted to do another VA loan. And I had to go through and show him the pros and the cons of a VA and a conventional loan. And at the end of the day, he's like, I don't want to do a VA loan. It doesn't make sense to do the VA loan and do the fees. And it's better to do conventional. And so you're right. A lot of those programs are only geared towards the initial loan or somewhere in between, but you get a seasoned buyer or person who's been in their home for a while, they're refinancing, the programs just don't make any sense. But this program for the engineer, this is a first timer and a last timer and everything in between.
So I'm assuming you just show them the different options so that they can see the difference between each of those options. And so because an engineer, what I know about engineers and accountants and those kind of people is like they want to see data, they want to see numbers. So I'm assuming you're given some information so they can make those comparisons.
Yes, I give them all of the data that they need to know to have the comparisons. And I teach them how it works so that they can understand, like when you're driving down the road and you see a billboard that says, hey, if you do a loan here, you get the appraisal free, but you get this interest rate. And you go down the street another 2 miles and it's like, well, wait a minute, the interest rates are this, but you have to pay for your appraisal fee. It's like, how do you know who's giving you a better deal? The guy with a higher rate and lower fees, or lower fees? And I mean, there's so many caveats or integral moving parts to a loan, and the solicitations of the different lenders and banks and credit unions out there. It's like, how do you know who's giving you the better deal? Or how do you know it's even a deal at all? But if I go in there and I structure the loan and I show the engineers how it works, the people that really think about numbers and how it all goes together, this makes sense.
Cool.
So I know, let's say for someone that's college age, they're, getting their degree in engineering. A lot of times they're getting job offers while they're still in school. They may still have a semester left and they're getting job offers for once they graduate. So at what point are you able to start using the engineering, or like getting them qualified, getting that process going? What point should they kind of be able to anticipate being able to use that?
That's a great question. You know what? I've never had anybody ask that. But with the program, the way we've got it put together is that if they are in school to become an engineer and they've got some time under them, and to be honest with you, I mean, we've been doing it for people who are in school and out of school. They don't even have to have the official degree. But, once you've started down that road, you're kind of, I guess you could say you're kind of there. So I've been giving it to them, and if they end up changing their path down the road, well, okay, so we give them, you get a gimme, right? But down the road, they wouldn't be the engineer, they wouldn't get the program. But if they're in school and they're working on it, we're happy to do that for them. I've got the first time home buyer one. So if there was some, like I did a loan for an engineer guy, who's brand new out of school, newly wedded guy, didn't have any money because he just got his new job offer and he had his school debt. He didn't have anything saved. So we did a down payment assistance engineer loan for him to get him in the house. And yet I've had other engineers that have sold their home, have got $300,000 to drop down on the house, had some guys somewhere in between there. And we've got a program that fits every one of them.
That's cool.
We're a hybrid of the program. How's that?
Yeah, that's cool. So I think we had talked about another, just to switch gears a little bit. There was another program that I just saw come out that was talking about, so we're switching gears. We're going to go away from engineer programs for a minute. And we talked about another program that's brand new on the market that has higher debt ratios. And if people don't know what a debt ratio is, it's your ratio of your income compared to what debt you're paying. But most of the time you're at between a 40, 45. If you're into some government loans, you might be able to get a 55% debt ratio. But it seems like I just saw one come out that was higher than that. Do you know about that program, Bruce?
Yeah, as a matter of fact, this new program is a conventional program sponsored by Fannie Mae. If you're doing a refinance, a rate and term refinance, you can go as high as 65%.
Wow.
Absolutely blows my mind. This is brand new. So some of these people who may be strapped for COVID, I don't know, whatever put them behind to where they've accumulated more debt and their ratios are pretty tight and they can't qualify for a loan, there's a brand new program. You can go to 65 debt ratio. It's incredible. There's just a couple of weird caveats to that. Your mortgage has to be a current Fannie Mae owned mortgage. So you give us the address, we look it up and determine whether or not Fannie Mae owns your loan. If it does, we can go to 65 and refinance you. Amazing opportunity.
And that could actually work pretty well for some of our clients that, you know, maybe have gone through a divorce or something. And so all of a sudden their income isn't what it was. And, you know, maybe now they have child support, something like that, that's driving some of those ratios up, but they want to stay in their house. They don't want to sell their house. Right. And so that maybe that could be, you know, a good option there, to be able to do something like that.
Yeah, if you think about it, it's actually really brilliant. You've got a guy or a lady, a family, a person, they're making their payments now, but they're struggling. Why would we want them to fail in their financial responsibilities? I mean, when you go into debt, the debtors, they want your payment. That's what it's all about. So if someone's making their payment, why don't we lighten the load a little bit and make that easier for them to continue making their payments? Let's lower their debt ratios. Let's lower their payment. Let them keep their house. It's a fantastic opportunity. Everybody wins. I love it. Someone was thinking on that one.
Yeah, yeah. What about like credit score on that? Have you looked up what or seen what that needs to be? Is it normal? Like you can go down to 620 or something, go a little bit lower on some of that?
So with that particular program, Taylor, 620 is the magic number. If you have a minimum of a 620 credit score, you can qualify for a 65% debt ratio loan.
That's awesome. What about your, go ahead, Taylor.
Yeah, I was just going to say, you know, with a lot of those programs where you're going outside of the normal bounds, it requires extra stuff in other areas. So the fact that you can go to, you know, a minimum of 620, obviously, you know, it's not a guarantee, but if you can go down to 620, what about like loan to value? Is it like 50% or something like that?
No, it's actually 97%. It will let you take your debt ratio, or pardon me, your loan to value to 97%. I mean, that is the minimums and maximums on all sides. It's incredible.
Yeah.
You have to do a minimum of a 3% down payment. And if you only have 3% equity, they'll let you take your debt ratios to 65, only on a refi. On a purchase, like Ron had mentioned earlier, you'll be lucky to get anything better than 45. But on a refi, 65.
Yeah, I think you could go as high, you know, if you have good debt ratio, good debt ratio is good credit. I think you can go as much as a 50% on a conventional these days, but you're not going to get 65. So the refi, I mean, that's just unheard of. So that's really amazing.
Even for FHA, sometimes you can get up to 56 or something on FHA, but then you got mortgage insurance and, you know, all this other stuff that's happening. But yeah, that's awesome. That's really cool.
Yeah, it's going to be a great program for a lot of people.
Well, Bruce, that's good stuff. So I love hearing about brand new programs that are out that a lot of people don't know about. And actually, most loan officers don't know about these programs. So I love that you bring that out for us and share it with our realtor friends and those that looking for those kind of loans. I appreciate you to bring that up. So, how, if people wanted to get hold of you, what's the best way for them to reach you?
My cell phone is always the best. The thing never leaves me. I mean, even at nighttime, it's right there on the nightstand.
But don't call you at 1 o'clock in the morning, though.
Yeah, I'm not going to be happy if you call me that early. My wife will be even less happy if you call that early. But no, call me on my cell phone. It's 801-564-0569. I always call back. If you leave me a message, I will call you. If you don't leave me a message, I don't know you want me, so I probably won't call you back. So make sure you leave a message.
Say that number again.
801-564-0569.
Cool. All right.
And I'm just going to add another really quick plug. So on this engineering program, so Bruce is, I mean, this is something that he's put a lot of work into. It's not like someone presented him this program and now he's done it. He's pulled a lot of strings and done a lot of stuff to be able to make it happen. But like he said, it's because he knows, kind of knows what makes engineers tick. And so even if you aren't an engineer in engineering, if you need somebody that can, you know, go through some more of those details and be more analytical with your loan instead of just saying, hey, jump in the back seat, I'll drive you wherever you want to go. You know, he's gonna actually give you the experience that you need. So he's a great one to reach out to. You know, obviously I'm a little bit better, but he's real great too. No, I'm just joking, but serious. If you know, he's really great at being able to cater to that and making sure that you're having the experience that you want to have during that loan process. So, yeah, he's a good guy.
Well, thank you.
Yeah,
I appreciate that.
yeah, seriously, if anybody, if you know of engineers, or you know, if at any time, just reach out to Bruce and he'll hook you up with the right loan program. So,
Yeah.
Bruce, I appreciate you taking some time and being with us today.
Thank you. It was my pleasure. I enjoyed this. This is a lot of fun. We'll have to do it again.
Yeah, awesome. And Taylor, we appreciate you. You used to be on this podcast like almost every day, but he's gotten busy. He's like running the show for me. So I get to get out and do this kind of stuff, and he makes sure that everything's going forward. So I actually really appreciate him doing that, because I get to get out and do the fun stuff, and he does the hard stuff for me. So
Yeah, where were you guys at today while I was working? I forgot. You're out skiing
Marketing.
today.
We were marketing.
we were marketing
That's right.
on the
Yeah.
boat. Hey, thanks you two for being with us today, and for all those that have joined us, whether you're watching us on YouTube or whether you're listening to us on wherever podcasts are being, wherever you listen to podcasts, we're probably there. Agent versus Lender. And if you need to get hold of our team for whatever reason, our main number is 801-628-7667. You can reach us there, and that will wrap up today's session of Agent versus Lender.